All right, guys, we are here today. We got Jerome Powell coming on in about 30 minutes. We'll see what that looks like. We'll see if he's supposed to be getting interviewed. Let me take a look at this. Let me know how the stream's running. It should be good. Yeah, so this is supposed to be a moderated discussion by the New York Times. Did y'all hear about the UNH CEO, man? That's crazy, dude. Honestly, that's some corporate spy stuff going on. Who knows, though, man? But crazy, honestly. Pretty genuinely out there. Did y'all hear about that? It's ridiculous, man. Yeah, horrible. Do me a favor, hit the subscribe button, hit the notification bell. We appreciate it. We got Jerome Powell speaking. I'm trying to see where it's supposed to play. I don't know where it's supposed to play at. It's a moderate discussion at the New York Times Deal Book Summit. So we'll see what that looks like. We'll see if he's supposed to talk about the economy in some light, right? Okay. Pretty sure this is where it's going to be. I'm wondering, where to find this here. I'm looking for it. I'll cover it no matter what. We're going to find it and cover it. But, man. Let me look. Deal Book Summit. There it is. Okay. Go away. I think I have a Google account here, but yeah. Yeah, so Elon Musk not at the Deal Book Summit speaker lineup. How do you watch this? Hold on. Bear with me, chat. Look at NVIDIA popping up today at 144s. Yeah, so I'm looking at... I'm looking for this, guys. I want to make sure this is going to be live to people, because this might not be live, and if it's not, we're going to have to... So we had some people speaking. So Fed Jerome Powell is expected to stick to the script and signal that the Fed is no longer in a hurry to cut its rates to neutral, according to economists at Deutsche. Powell said in the that the economy is not sending any signals that we need to be in a hurry to lower rates. But I'm wondering if we're actually going to be able to watch this, guys. Hold on. Let me make sure. It's live? Okay, let me see. I'm looking for it. Because the event is at 1:40 is when he's supposed to speak. So I'll cover it if it's live. Don't worry. It's going to be at 1:40, which is 12:40 my time. Yeah. I'm just trying to make sure. The speech is in 30 minutes. So yeah, you can see a timer in the top left. Or top right of the screen. I got you guys. Just bear with me. We're going to figure it out. I'm just trying to confirm a couple things real quick. So yeah, the New York Times Dealbook Summit is taking place today, December 14th. It's at the Jazz at Lincoln Center in New York City. It features live unscripted interviews with leaders in business, politics, culture. It's conducted by Andrew Ross Sorkin, Times columnist and Dealbook founder. So yeah, it should be live, I think. Just making sure. Here's the Dealbook Summit. Let me find the New York Times. The only thing, though, is that they might... Yeah, we're watching for it, but I'm trying to see if they have the full thing or what that's going to look like. Powell's supposed to speak, but... Yeah, we're going to cover it, though. Don't worry. I got you guys. Yeah, so it looks like he's going to be speaking. We're going to cover it. We found it. Yeah, so it's going to be... Okay, I found it. I got it. All right, cool. So yeah, so Powell's speech is going to be live. I don't think they're covering the rest of it, but I think it's just Powell's speech is going to be live. All right, so what do you guys think? Let me do a poll here. So I'm going to get a poll going live. Do you think it's going to be bullish or bearish? Are you bullish or bearish on today's Powell speech at 1:40 p.m.? Bull, bear. It's an interview from my understanding. And he's going to be talking about politics just to give you a breakdown of it. Right, so the conference is going to bring a bunch of big names together, to be honest. Y'all can hear the music, correct? You should be able to. Let me make sure. Oh, no, y'all can't, man. I'm over here rocking out in silence here. I'm sorry, guys. There you go. That's better, huh? All right. So we're dipping down a little bit on NVIDIA. We're at 144. So look at Bitcoin. Bitcoin at 95s. I'm looking at the S&P and the NASDAQ too. So I'll put that up as well. Again, the speech starts. You can see the timer in 22 minutes. Here's the NASDAQ. NASDAQ's pretty green on the day too. Almost up to 21.5, which I believe is highs. Let me see. I might be a little off with that, but let me check. Here's a daily chart. Yeah, so we're around highs of the NASDAQ. I don't think we've hit this before. Yeah, so we're at literally lifetime highs on the NASDAQ today, breaking it ahead of Powell's speech. So we are breaking lifetime highs on the NASDAQ today. Again, honestly. So the new lifetime highs of the NASDAQ are around just under 21.5. I'm curious, I'm curious what we're going to get with that, All right, so yeah, the Dealbook Summit starts in 20 minutes at 1:40, like 22 minutes to be exact, but yeah. Yeah, we got a lot of Sam Altman. Yeah, so I'm looking at they have Sam Altman, Jeff Bezos, Bill Clinton, Alex Cooper, Sean Fain, Sundar Pichai, the CEO of Google, Prince Harry, and Jerome Powell. Speaks at 1:40. NASDAQ breaking lifetime highs. NVIDIA all the way back to almost 145s as well. Smells like coffee in here. Yeah, so again, Powell is going to be doing a Dealbook Summit panel. Let's see if we got any updates on what he's talking about. Yeah, guys, we still got 20 minutes. Did you take a nap? No, it's called Dealbook. Yeah, we'll see what Powell says, honestly. Bitcoin, all the way back up. I bought the dip a couple days ago at 92K. We're doing really well. 60% are bullish here. Yeah, 60% are bullish. So again, it's going to be at 140. 140. See what he says. We're We're all waiting for Powell to speak. It's going to be a range of issues, including inflation and potential changes in tariffs and immigration policy under the new administration. I think that's going to be a big talking point for today's speech, is that specifically, you know, moderated discussion starts at 1:50 today in about 16, 17 minutes. Again, it's going to be on a range of topics. Yeah, so Powell remarks are going to be watched for a sign of pushback or support. Key jobs data due Friday. Quiet period for the Fed officials ahead. We have a blackout period. He also says he's in no rush to cut rates. He said that in November. And so we'll see what he does this month. You know, the Fed decision is going to be on the 18th and exactly 2 weeks from now and 2 Wednesdays from now. So a lot of stuff's looking at it. You know, a lot of stuff's going to be, a lot of places are going to be watching this today. So pay attention. Yeah. And again, this should be streamed live. All right, so the latest so far, Sam Altman, the CEO of OpenAI, said that he did not fear that Elon would use his political power to hurt competitors, and that AI, general intelligence, roughly speaking, a machine that can do anything the human brain can do, could arrive in the years to come. Comments were part of the annual event in Manhattan, which is, again, a series of discussions with some of the moment's biggest newsmakers in business and politics. Ken Griffin, the founder and CEO of Citadel, was the first guest on stage, saying that with the House, Senate, and the White House in the hands of Repubs, we have a chance to govern, end quote. Serena Williams also spoke, 23-time Grand Slam champion, managing partners at Serena Ventures, spoke about her tennis career and some other stuff. But again, Powell is scheduled to speak. He's the chair of the governors of the Federal Reserve. And again, we're going to live stream the entire thing here. Once it starts, we still got 15 minutes, so we're still waiting for that speech to start here. And yeah, we'll see what we get with it. We'll see what it looks like. Yeah, what's up, Bitcoin Gold? Bitcoin 100K this week? I hope so, bro. I thought it would hit 100K last week. It still hasn't, but I did buy the dip, and my hypothesis on it worked. We went up, so that's good. Still waiting for Powell. Still waiting here, chat. NASDAQ broke lifetime highs again today. It's a big event, big news story for today. Lifetime highs. And so, yeah, we'll see if it continues. Again, we got until 1:40 until Powell hops on board. So it says deal book attendees. Yeah. Yep. All right, so get ready. Again, we got 12 minutes. Got about 650 people here. Let me see if we're in sub only mode, so that's good. Hit the subscribe button. We broke 150,000 subscribers. Look at the NASDAQ turn a little bit. NVIDIA dipping down too. As you guys can see on the screen, speech starts at 1:40 p.m. Eastern Standard Time. We'll stream the full interview live right here. Subscribe to chat. We appreciate it. Look at the NASDAQ right here, dipping down underneath me here. Did y'all hear the UNH, man? That's a crazy thing that happened, dude. That's absolutely ridiculous, man. Yeah, the UNH CEO. Man, dude, that's crazy, honestly. So we got Sam Altman speaking already. So let me see. So I'm trying to see the other people that are speaking at this event that are going to be live streamed. Not all of them are going to be live streamed. Only a couple of them. So. All right. Yeah, the UNH news is crazy. Let's see. You type 120 words per minute. I type like 100. Not quite 120, but 100 on a good day. You know, it starts at 140, guys. It's in the. Not only is it in the title, but it's also there's a timer on the top right. There's a timer on the top right. Bearish here, super red now, minus 2,300. Look at the NASDAQ. Again, NASDAQ broke lifetime highs. NVIDIA's pulling down today. Still got 8 minutes left. 8 minutes left. So we're looking at a couple other things. So we're waiting for them to kickstart their live stream. So Jerome Powell is the only one that's going live. Sam Altman, they live streamed as well, apparently. So they live streamed Sam Altman. Sam Altman from OpenAI, and I'm wondering if this is affecting Bitcoin. So one thing to listen to about Jerome Powell, they're going to ask how tariffs and new immigration policy affect the Fed's mission to bring down inflation, right? So that's one of the things that they're going to be looking at. Yeah. Yeah, so again, it's slated to start at 1 in about 6 minutes. And just also, I'm going to switch my headphones out to make sure you guys can hear everything so that we always make sure. We got 7 minutes left, really. My timer's a little bit early. But look at the NASDAQ pulling back down. All right, we'll see if we get a pop back up. We got over 1,000 people here. Let me make sure you guys can hear this music. Can you hear the music now? You should be able to. If you could hear it good, you'll be able to hear the actual press conference. Again, still waiting on them to kickstart the stream. Yeah, so we get power marks. We'll see what he says. I'm optimistic. Y'all can hear the music, right? Correct? All right, good. You'll be able to hear him then. All right, guys, 6 minutes left. 6 minutes. We'll see what happens with the NASDAQ, you know. We got the Deal Book Summit. Last update was 2 minutes ago on Bill Clinton. Yeah, Bill Clinton, Jeff Bezos, Sam Altman, Alex Cooper, Sean Fain, Ken Griffin, Sarah Nelson, Sundar from Google, Jerome Powell. Yep, Bezos spoke. Yeah, y'all do me a favor, bump that subscribe button. We got 1,600 people here live. John, are you all through trading for the day? You were spot on this morning. I know, dude. Honestly, my trading was great this morning. I dare to say I was good this morning because, you know, like, listen, I got a reputation to protect as the top 3 worst trader of all time ever in the world. So, you know, we got to ease into those expectations here. But my trading was good. I would dare say good this morning. But no, we're not going to trade anymore today. Cutting rates is very likely. Yeah, if we look at the rate cut expectations. Again, we're waiting on them to start the stream. I'll put it up as soon as they start it. And again, the good thing about me using OBS now is it should be even more real time, to be honest. Like, we should be even more real time. So. All right, guys, 3 minutes. Sitting here hanging out waiting. All right, so look at the market start to come down a little bit here. Interesting. Okay, I found it. All right, cool. I found it. I think they're running a little bit late though, but we found it. All right, so we're here. We got it. Good. I think they're running a little bit late though. Again, it's supposed to start in 2 minutes, but I think they're running a little bit behind, which is fine. You know, it's the New York Times. They're allowed to do it. All right, guys. Bull or bear for Powell? We got Big Papa Powell coming soon. My timer started here. We are at 12:40. They haven't started their stream up yet, which is fine, you know. I think they're a little bit behind, but that's all right. All right, I'm gonna turn the music off here, chat, and we're gonna get ready. I'm just waiting for them to start. Again, they're a little bit behind. Haven't started their stream up yet. Still waiting. Still waiting. Let me go make sure nobody else has it either, but I'm pretty sure they don't. Yeah. Yeah, so we're just waiting on them to start it up here. I got multiple different sources up here, so bear with me, but we're just waiting for them to start it up. So we will start when they go live, whenever that is. Jerome Powell must be late. Might be running a little bit extra here too. Yeah, exit out of chat GPT. All right, here we go.
A lot of consequential people who come on this stage, but in truth, when it comes to the global economy, this one man may be it. He has been in charge of the nation's monetary policy now for 6 years under both President Trump and President Biden, and through the most unusual and challenging times, we should say, the COVID pandemic and all the economic shifts that, of course, came with that. Fair to say that the fears of a recession never happened, so far at least, and he has managed to pilot the economy through what a lot of people thought was an impossible idea, which is this idea of a soft landing. He has been praised and criticized, often in the same day. And now the very idea of the Fed's independence is in question politically in Washington, which we'll talk about. We could not be more pleased to have you here with us. So thank you.
Thanks. It's great to be here, Andrew. Thank you.
You know, most of the interviews that you do, people talk directly, specifically, and start about the economy. People actually rarely, I have found, try to find out about you and who you are and how this all happened and how you feel about all of this. And so before we get into anything economic, I just want to get personal with you, because as I said, there's a lot of powerful people in the world. A lot of them come on this stage. There are presidents, there are CEOs, there are billionaires who are powerful. But in many ways, uniquely, you have a power that others do not. And I'm so very curious as a human and how that power sits with you.
Well, first of all, it's great to be here. Thanks for having me. I guess I would say that I really love the work that I do. And that's the main thing. I like my job. I love my job. It's a great honor to do it. The work is incredibly interesting all the time. And I work at an institution full of highly talented people who are committed to public service. We know that the things that we do really matter for everybody, people and companies. And so I get enormous satisfaction about that. And there's a fair amount of responsibility, but you think about people who run large organizations, it probably feels very much the same.
Even when you can just change the dial and it changes everything.
So I've been at the Fed for almost 13 years, and I've been chair for 6.5 years, and I'm kind of used to the work that we do and the way we do it and all that. And so I don't experience it as difficult and unpleasant, although it can certainly be that. But I just feel lucky to do it, and I basically enjoy the work a great deal.
Okay, so let's just go back in time, though, just to explain a little bit to everybody about how this happened. And it didn't just happen to you. It's something that you wanted. You graduated from Princeton. After Princeton, by the way, you went to Europe, from what I've read now. You have a guitar.
Yeah.
You were playing music in Paris, including the song "I'm So Lonesome I Could Cry." Could you still play that song?
That's not a hard song to play. I could play that song. I can't sing it very well.
Did you make
anymore.
money doing this?
No, never. People pay me to stop, actually.
And then you come back to the States, and you become a lawyer. Then you go to Dillon Reed.
Yeah.
And when you're at Dillon Reed, which was an investment bank, just to date the world here, no longer with us. It's been merged into a whole bunch of other places since then. You had a boss named Nicholas Brady, who later on, by the way, becomes the Treasury Secretary. But I'm curious, you're sitting there at this bank, and it was at this bank that you knew that you wanted to do something in public service.
Actually, when I was in college, I'm not one of those very mature kids who came out with a plan. I really had one thought. I'd grown up in Washington, D.C. My family was not part of the government and those elite circles, but I had this thought that I wanted to have a life which was mostly in the private sector, but then to do public service from time to time. And I had people like Cyrus Vance and George Shultz, who some of you may remember, in mind. People like that who had great private sector careers. That was the only idea that I had. And so one day at Dillon Reed, I forced myself to get up and walk up the stairs and knock on Nick Brady's giant office, which seemed to me like the Palace of Versailles at the time, given I was working in a broom closet at the time, and say, Nick, if you do anything in Washington, he's a former U.S. Senator, he was close to former President George H.W. Bush. If you do anything in Washington, I'd love to staff you. And he said, that's great, thanks. He asked his assistant to write my name down, and I went back to my broom closet, thinking nothing would happen. But a couple months later, I get a call from Denise Emmett, who says, please come up. And I worked on a project with Nick Brady in Washington. We became friends and colleagues. He becomes Secretary of the Treasury, eventually invites me to go to Washington as an assistant secretary. And honest to God, the point of the story is that little bit of initiative to force myself to get up and very fearfully knock on his door, thinking he might take it the wrong way. Maybe I wanted to leave the firm or something. And that little bit of initiative, without that, I would not be sitting here. There's no way I'd be sitting here. That is what opened the door to me to do public service at a high level that I hadn't really earned or deserved. So
Did you ever think, you don't have a PhD?
No.
So did you ever think that you wanted to go to the Fed?
So when I worked at Treasury for 3 years. And I really liked the people at the Fed, people like Don Cohn and Alan Greenspan and many others. I liked it, but I never thought that's where I would wind up. I thought I'd love to come back and serve again in some kind of economic capacity, but I never thought I would be at the Fed. So then what happened was I did a study of the debt ceiling during the 2010 debt ceiling crisis, and I briefed really the Republican House and Senate caucuses and convinced them that they had to raise the debt ceiling, that it wasn't a fake thing, that there really would be a default. And the Obama administration was extremely grateful to me for doing that and nominated me to the Fed. And I've loved it really since I started there.
So you never had the sense, there's a guy you probably know who has a sense that your job, he says, it's the greatest job in government. You show up to the office once a month and you say, let's flip a coin, and everybody talks about you like you're a god.
Yeah.
That is President-elect Trump.
I know, yeah. So he's right. The part about it being the greatest job, it might well be right. I have to say I do, as I mentioned, I do love the work, and it's a special place to be surrounded by people who are so dedicated and to know that your work really matters for people. It's a very special honor to do that work.
Did you laugh when you heard that?
I thought he's partly right there but he's not right about the come to work, once every month.
Just the flipping of the coin part?
No, that part it's not like that. Not like that.
Let me ask you this, because it is the sort of political question that I think is in the mix right now. Which is, you have talked a lot about the importance of the independence of the Federal Reserve. This is a group of people that I know that you are highly committed to. And there are now genuine questions because the president-elect has been quite outspoken about it, just publicly, about the idea that maybe the Federal Reserve should come under more control and the White House should have more influence over it. What do you think when you hear that?
Well, I think that what is the case for the Fed being independent? What does independent mean? It basically means that we can make our decisions without them being reversed, other than by Congress, which created it. We're a creature of Congress. We're not in the Constitution. We're a creature of statute. So that's what independent means. And that gives us the ability to make these decisions for the benefit of all Americans at all times, not for any particular political party or political outcome. We're supposed to achieve maximum employment and price stability for the benefit of all Americans and keep out of politics completely. I think there is very, very broad support for that set of ideas in Congress, in both political parties, on both sides of the hill. And that's what really matters. It's the law of the land, and I'm not concerned that there's some risk that we would lose our statutory independence, because I do think that those set of ideas are strongly believed by people.
But do you fear, he has talked openly about firing you, which is something technically he's not supposed to be able to do.
So I never discuss anything that elected officials say, so I'm going to disappoint you here. I just know, this is our focus. The U.S. economy is in very good shape right now. It's in remarkably good shape. We are the sort of envy of other large economies around the world. And I want to do everything I can to keep it there during the rest of my term. And I feel very good about where the economy is and where monetary policy is.
We're going to go there in a moment, and I'm going to try a slightly different approach with you, which is this. Because this guy's not elected yet, or even confirmed. So the new Treasury Secretary, likely to be, if he gets confirmed, Scott Bessent, who I think you know, has made this is what he told Barron's. He said it publicly. He said, quote, and this is an effort to undermine your power. He said, you could do the earliest Fed nomination and create a shadow Fed chair. And based on the concept of forward guidance, effectively the idea of what people expect in the future, no one is really going to care what Jerome Powell has to say anymore. What do you think the impact of something like that would be? Do you believe that that's even a possibility in the world?
So let me say, I don't think that's on the table at all. There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships, for example, with the Council of Economic Advisors, but most importantly with the Treasury Department. The Treasury Secretary and the Fed Chair have had breakfast or lunch together every week for 75 years. And not more than that, the institutions have to, there's got to be trust and mutual respect and acknowledgement of the different authorities and boundaries that we have, but a very constructive relationship because, in times of crisis, we work much more together under the law. nonetheless, it's a very important relationship, and I'm confident that we'll have the same kinds of relationships with the incoming
that first lunch,
administration.
though, is going to be interesting.
It's going to be fine.
Have you guys talked?
I don't know him. I don't know him well, but I am confident that I will have the same kind of relationship with him once he's confirmed as I've had with other Treasury secretaries.
Okay, let me ask you a slightly different question that's in the same category, but actually very different, about just influence from the White House, because I think the public, it would help people to understand it. So before Paul Volcker passed away, I went to go visit him in his apartment on the Upper East Side. This is back in 2018. I was writing a story about him, and he had just written a book, and he had talked about and told me a story about how President Ronald Reagan and his chief of staff back then, James Baker, had asked him to come to the Oval Office. This is in 1984. And he says, quote, "Reagan didn't say a word. Instead, Baker delivered a message. The president is ordering you not to raise interest rates before the election." Now, Volcker wasn't planning to raise interest rates, and he said that he was stunned by all of this. And then he went on to say that he later surmised that the library location had been chosen, quote, because unlike the Oval Office, it probably lacked a taping system. Has anything like that ever happened to you?
Basically, no. No, I mean, you remember in the prior administration, there was a lot of public things that happened, and the things that happened in private were exactly the same. The president said the same things to me privately as he said publicly. I said the same things privately to the president as I said publicly. So all of that it was in the prior administration, but nothing like, I know I'm very familiar with that story and with that book, by the way, but nothing exactly like that happened.
The other question that I had just is, this is a government question, which is, we've been talking about DOGE and things like that today. The Fed is self-funded, my understanding, but it does have congressional oversight. As Congress thinks about trying to figure out how to deal with the debt and the deficits and trying to make things more efficient, do you think that the Fed could come into or come under some kind of DOGE-like program?
You know, part of our independence is that we are self-funded and we have, the ability to make our own decisions about hiring people and that kind of thing. So we've got strong legal independence. We do try to run the Fed respectfully, and we know these are taxpayer dollars, even though essentially we have a large balance sheet and our assets earn more than our liabilities, so we're earning a spread, and we give those profits every year to the Treasury Department. But we also use some of it to pay for the Fed. But we try to be good, stewards of the public's money as well.
One of the things that I think is fascinating about you and differs from many of the other predecessors of yours is you speak very plainly and very openly and transparently. Alan Greenspan spoke somewhat obtusely. There was always this sort of communication divide in some ways. And I'm so curious how you think about that, which is this idea of communicating, and some people, by the way, would argue over-communicating in terms of the way the Fed approaches its job today. Sort of post-financial crisis, there really was a move to try to tell the public what was going to happen, to try to tell everybody where everybody thought the Fed was about to go, and whether you think long-term that has helped you, or long-term whether you think that has to be rethought.
So go back 50 years, and central banks were mysterious, and there was a lot of lore that was the right thing to be. Then there was a bunch of academic research by people like Alan Blinder and others, which came to the view, which is, I think, clearly correct, that if the market and the public understand how you will react to incoming data, then they'll do your work for you. So today, when some economic event happens, markets adjust immediately, long before we take any policy action. So that's the whole modern theory, is to be as transparent as possible. And we've greatly increased transparency. People do make the argument that, enough transparency, maybe it's too much. But I think generally the overall trend over 40 years of history has been very constructive. And also, we're a public entity. We shouldn't be mysterious. We should be telling people what we're doing and why. In terms of speaking plainly, I think it's important that the interested public be able to understand what we're doing. And so it's important that we explain it in a way that doesn't include a lot of jargon, Jargon is really important when you're talking to other central bankers or other economists, but when you talk to the public and use jargon, you just make people angry because it excludes people.
But do you think it makes it harder for you to make a snap decision if a snap decision is necessary because the markets have already moved on this expectation of where they think you're supposed to be or where they think you're going?
That hasn't happened. I mean, we've moved very, very quickly, both up and down with rates when it became appropriate to do so. I mean, we cut rates. We were the first central bank in the world to cut rates to zero during the pandemic, and we raised rates during the inflation faster than the Fed ever has. So
here's a question about where we are now in this economy, and I want to get into maybe where the economy may go. But the expectation is that you're going to cut rates. But I'm curious about why that is the expectation, insofar as we're still in a moment where it appears that inflation looks a little stickier than we thought it did, and the economy is stronger in many ways than had been expected. And so the question is, what is the cost, if you will, of waiting?
Right. So let me take a step back on that and just say the background is that, as I mentioned, the U.S. economy is doing very well. We're in a very good place with the economy. We're growing at around 2.5%, and inflation has come down. Headline inflation was as high as 7.2 or so. Now it's at 2.3%, and unemployment's at 4.1%, which is a little higher than it was a couple of years ago, but it's still it's a very, very low level. And, we're not quite there on inflation, but we're still making progress. So the backstory is that the U.S. economy is in very good shape, and there's no reason for that not to continue. So we raised rates to between 5.25 and 5.5, and we held them there for 14 months. And other central banks around the world had already started cutting. We were the last major central bank to cut. And we're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming in a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
Well, tell me, I'm actually very curious about this, just how you think about it. Occasionally when you either get it wrong or it's not where you think it was going to go. As you just said, you had a different view in September than you do now. Obviously, things change. But what was it in September that surprised you? And if you could go back in time, do you think that you would have known the difference?
Well, in September, what we saw was the unemployment rate had moved up close to a full percentage point. And again, we'd held on long after other major central banks had cut. And I mean, more broadly, there are two risks, right? There's the risk that we move too quickly and undermine the progress we've made on inflation. And there's the risk that we move too slowly and unnecessarily undermine the labor market. And we're trying to be in that middle place and get it just right so that we continue to get inflation coming down. We keep policy at a restrictive level, but at a less restrictive level over time. That's what we're trying to do. I would say in September, it was time for us to cut because it was time, but also because I wanted to send, and we wanted to send a strong signal that we were going to support the labor market if it continued to weaken. What happened instead was, in the couple of months after that, we got some data revisions which strongly suggested that the economy is even stronger than we thought, even stronger than we thought. So the picture is actually stronger than it was then.
How do you think we, as the public, should think about when we get these labor numbers, which, by the way, seem to get revised all the time? Do we have a counting problem? No, and I ask it really, because oftentimes we'll see a number, and then you'll find out, a month later that not only was there a new number, but actually the old number was off by more than you could expect. Do you think there's a better way?
So the way it works is that the numbers that people see from the household survey is the unemployment rate, and then the payroll jobs, that's an economic establishment survey. They're surveys, so you're not counting people nationwide. You're doing as sophisticated as you can survey, and you're projecting that out to the nation. What's happened lately is that survey response levels have come down, and that has probably meant for smaller smaller groups of people, and that means there's more volatility. There's been more volatility in the revision. So you've seen a lot of months in which a job number comes in and then it gets revised down the next month, and that's typical when the unemployment rate is going up. The labor market data is among the best data that we get. We do eventually, the Fed doesn't do this kind of data, but it eventually gets down to counting people and tax records and things like that. But the first numbers that you see are survey-based, and they're going to be a little volatile.
How do you take into account, and do you, some of the things that may be forward-looking in terms of political or new policy changes? So we heard a couple of things this morning when we were talking to Ken Griffin. One is he thinks that the economy is about to rip in a great way because the regulatory shackles are going to come off the system that were under the Biden administration, and President-elect Trump is going to take that off. At the same time, we also talked about tariffs and the uncertainty that would create, which he does not think is going to actually create much uncertainty, at least for a while. How do you, sitting in your seat, think about those things?
So like all forecasters, we have to kind of make a guess at this point about what's going to mean for the economy. But let's take tariffs. Here's what we don't know about tariffs. We don't know how big they'll be. We don't know their timing and their duration. We don't know what goods will be tariffed. We don't know what countries' goods will be tariffed. We don't know how that will play into prices. What will be the transmission into prices? We don't know how people in the markets and in the economy will react to that. And we don't know whether other countries will retaliate. So that's the list of things that we don't know. It's a partial list of the things we don't know. So we can't really start making policy on that at this time. That is something that lies well into the future. We have to let this play out. We literally don't know all those things. The main thing we don't know is all the other things that will be happening in the economy in 6 months or a year when this starts to matter. So what are we doing? We're modeling this. We're looking at it. We're evaluating it. We're observing. But it's right. The decisions we're making right now are not about that. They're about what's happening in the economy now.
Similar answer in terms of immigration. And the reason I asked about immigration is, the CBO has calculated that if there's one force in the economy today that could be a major boost or not to the GDP, jobs, tax revenue, lowering the deficit, all of it, seems to be about higher net immigration.
So let me say, for both trade and immigration, the Fed has no role in that policy. We don't have an institutional view on the right level of tariffs or the right level of immigration. It's just not our job. That's the job of elected people, and we don't comment on the decisions they make for whatever reasons they deem appropriate. We don't comment on that. But I can tell you, there was a great deal of significant wave of immigration. It's now the level of immigration has come way down in the second half of this year as the Biden administration changed its policies. Right. It's true that a lot of people came in and they went to work, and that was part of why the GDP growth was so high in 2023, was a wave of people coming in and doing more work and spending money.
I know the dollar is the Treasury's department, so I'm not going to ask you about the dollar per se, but I am curious, just because it relates to tariffs, there has been this sort of speculation around tariffing countries, BRIC countries, that may be trying to build their own currency. And long term, if you're just to think out a long time, the idea of the U.S. as a reserve currency relative to somebody else creating their own, is that something that concerns you?
You started with this. The administration, and more particularly the Treasury Department, has responsibility for the value of the dollar and for exchange. It's not something that we opine on. We stay away from that, and they stay away from what we do.
You hope. Let me ask you a slightly different question about crypto. We were talking earlier also about Bitcoin, and it's going, it's rising. There's talk in Washington also about creating a Bitcoin reserve, actually. You do deal with currencies to some degree, and you have to think about some of these issues. How does crypto sit with you right now at a time when it appears that this next administration may legalize it in a much more broader way? I mean, it's legal now, but that there might be a much bigger groundswell for it.
So from the jobs that we have, what's relevant is really two things. One is just, what role should crypto assets be allowed to play in the banking system? We try to keep the banking system safe and sound. We regulate and supervise banks, and we would want the interaction between the crypto business and the banks to not to threaten the health and well-being of the banks. That's thing one. The other one just is, to the extent anybody's doing that through a bank, we would want the public to, if people are buying crypto products and things like that, there's sort of a consumer protection aspect of it. But they should need to understand exactly what it is and that sort of thing. But we're not, we don't regulate it directly, and we don't have that big of a role.
Would you ever own it yourself?
I'm not allowed to.
You're not allowed to?
No.
One of the big issues coming up is going to be taxes in the budget. We talked about DOGE and all of this. One thing that you have spoken out quite emphatically about is debt and deficits. You've been doing that now for a very, very long time. What is, in your mind, the tipping point for the debt and the deficit? In that, for a very long time, I go back to thinking of 2010 or 11. I read some of the speeches you were giving back then, and thinking about Simpson Bowles. And at that time, people talked about the debt and deficit. We're at a tipping point. If we don't deal with it immediately, we're at a knife's edge. We're going to tip over. And here we are in 2024, and we haven't tipped over yet. In between that, there was this whole MMT idea that somehow we could just spend money wildly, and that would be fine too. And I'm not sure that's gained too much traction either. Maybe it's been undone. But what do you worry about as the tipping point for all of this?
So you're right. I did work on fiscal policy issues before I came to the Fed. But at the Fed, we don't have oversight over fiscal policy. Quite to the contrary, Congress has oversight over us. So I would limit myself to saying this, that the U.S. federal budget is on an unsustainable path. The debt is not at an unsustainable level, but the path is unsustainable. And we know that we have to change that. We've got to get back so that revenues and spending are in better alignment. We don't need to pay the debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt, and that's not happening. We're running very large budget deficits at a time of full employment and strong growth. So we need to address that, and we got to do it sooner or later, and sooner is better than later.
Now, do you think the Fed should or could take into account the debt and deficits and that cost in terms of where you think rates can or should be ever?
No, never. I mean, if the central bank, this is you see this in some emerging market countries, for example. If the central bank can't raise rates to deal with inflation because the fiscal situation is so bad that they can't raise rates, that's called fiscal dominance, and that we're so far from that. I mean, we will always use I put it this way, we'll always use our tools to achieve price stability and maximum employment, 2% inflation. We're not thinking about, we better not raise rates because of the budget. If we ever get to that point, that we're far from that point.
Right. Before I forget, one of the reasons I wanted to actually ask you about Bitcoin is, to some degree, people think that is a symbol of people's faith or lack of faith in either the U.S. dollar or in the Federal Reserve itself, in terms of the system. What do you think of that idea?
I don't think that's how people think about it. I mean, it's so, people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it.
When you think about other countries, and I know it's not your job necessarily to think about other countries, but you spend a lot of time, I think, talking to your peers at other central banks. What are you most concerned about? Are you most concerned about the economy in China right now? Are you most concerned about Europe? Take us around the world.
As good as things are in the United States, of course, there are always risks. And certainly geopolitical risk is very elevated around the world with Ukraine and the Middle East and kind of very weak growth in places like China. That's all out there. I think domestically, we do see low and moderate income people under some economic pressure. If you read, for example, or listen to the earnings reports from some of the retailers who deal a lot with low and moderate income people, they will uniformly say that people are under pressure, they're very much price shopping and that kind of thing. So that's the aggregate numbers for the U.S. are really good, but we see pressures there in the lower income spectrum that we didn't see 2 years ago after the pandemic, when people came out with really significant amounts of savings.
One of the, when we came up, and I don't know if you got a chance to see the video, we were talking, one of the big things was vibe session, this idea of how people think, the vibe about the economy. And I think the vibe had a lot to do with actually the result of the election. And I'm curious how you think about this question, about inflation. A lot of people were saying, well, it is this past administration's fault, the inflation problem. Some people said it was your fault. Some people said it was how much money Congress appropriated during the period of COVID. How do you actually think about it yourself?
Look, we shut down the world economy partially, and there was a global outburst of inflation. There was a time when there wasn't a single country in the world that had 2% inflation. It was everywhere, okay? And what was it because? It was because of a lot of pent-up demand. It was certainly because of very strong fiscal support and low rates. Right. All of those things contributed to inflation everywhere. And now it's, if you look at, I could show you a graph of 10 countries, and they all look like that. And I'd say, which one is the United States? You wouldn't be able to, you'd have a 1 in 10 chance of guessing. So I think that's what happened. And, the good news is, in the case of the United States, we're back to a much better place. But I will say, people are unhappy because the price level is higher. Right. You can tell people that inflation has gone down, which is the change in prices, but that doesn't matter to people who are paying 10, 20% more for the important things in their lives.
You are known to spend a lot of time talking to folks in Congress privately. Folks like Fetterman, by the way, love you, apparently. I'm curious what you think the state of financial literacy is in Congress today.
So like anything else, it's mixed. There are people who are very knowledgeable, and they tend to be the ones in responsible positions on the important committees. And there are people who, there's so many things to be an expert on when you're a congressman or a senator. Think of the breadth of the things they have to know about. Defense, it's endless. So it's not surprising that most of them are not, a good number of them are focused on the economy and, monetary policy and things like that. But many of them are focused on other things, as you would expect.
We are out of time, but before we go, I am told that you have a special talent. I don't know if the public knows about this special talent, but I thought since we're here, we should try it out, which is that apparently you can repeat sentences backwards, famously.
Ever since I was a little kid, I was able to see, and just for standard vocabulary words, I can see it in my head spelled forwards and backwards. I started pretty much any word, as long as it's not 12 syllables, And I started doing that for friends when I was about 10 years old, and they were like, "What is that?" So I would write it down. So I can just see that, and I'm not as good as that I used to be, but I can literally see the word forward and backward in my head, and I can spell it backwards. Like you're a word in a
So if I give you a sentence, can you do the whole sentence backwards?
I can do each word. I can't do the whole sentence.
So the sentence I had written down, this was Bernanke in 2008. It may be too long for you, though. If we don't do this now, we won't have an economy on Monday.
Do it, pal.
I'll do economy, inamos.
Got him. Is that right?
Imonos. That's economy backward. I'm not going to do the whole sentence.
Ooh, man.
Jpow, everybody, thank you.
Thank you.
That's it. Hey, I like it.
Thanks, Andrew.
Honestly, super interesting here. A couple things to talk about, right? Like we got... Number one, if you haven't already, check out my sponsor. Check out TopStep. TopStep funded account program and futures. If you want to day trade, do not fund your own account trying to day trade. Look, I know prop firms get some hate, but most day traders lose, right? It doesn't matter what course you take, who you follow. Most day traders are about to lose. And so does it make any sense to fund thousands of dollars into your own account when you're learning how to day trade? Absolutely not. Listen, you're probably going to lose. And to be fair, you're probably going to lose regardless of where you go. It's a lot cheaper to lose on TopStep. TopStep gives you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one's $49 a month. And so it's kind of like a souped up demo account. If you were going to pay for real-time data outside of this, it's going to cost about the same with a demo account, 20, 30, 40 bucks, same ballpark at least. But if you pass the test, the base one, you got to make 3K without losing 2K first. 3-to-2 reasonable ratio. If you do that, they fund you 50K with a 90% split, and they've paid out around $125 million since 2020. And so you have huge benefits if you pass it. There's some pressure on you, so it teaches you how to trade under pressure. But if you fail, you're not losing thousands of dollars like most day traders do. And most pro day traders trade futures, which is what this is. And if you use Top Step X, there's zero commission, no PDT rule in futures, and you can day trade, buy market, sell market. It's very, very similar to day trading stocks. You can day trade the NASDAQ, the S&P 500, the Dow, the Russell, gold, some currencies, and a lot of futures and Forex traders should be trading futures. And so if you want to check it out, I'm definitely biased. They pay me money, and so I'm 100% biased in their favor. Some would say I'm the top 3 most biased person of all time. But if you want to check them out, they are an affiliate of mine. I'm biased. It's a great way to help support our free content. Everything we do here is free. No, there's zero commission on Top Step X. If you use Top Step X, there's zero commission. There's tiny amounts of fees. If you trade micros, it's like 70 cents per contract in fees. So a tiny, tiny amount. If you look at like my profit on the day, I can make like $7, $4, $6, $1, $10, $20, and still net profit, no commission, tiny amount of fees. If you want to check it out, there's the link. You can also find the link in the description as well. Now, to get on to what Jerome Powell said here, you know, earlier this week, I don't know if it was this week or last week, people were legit arguing with me about, number one, hold on, wait. Understand I'm biased. Top Step is an affiliate of mine. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Not an investment professional. Don't sue me because I'm not liable, because I don't tell you what to do, and you can do whatever you want to do. Top 3 worst trader of all time. Do not copy anything I say. Do not listen to anything I say. Top 3 worst person ever. I do trade off stream. You're not going to see all my trades, all that good stuff. Understand all this stuff up here. Now, with that said, going back to what Big Papa Jerome Powell just said here, okay, it's really confirming and validating to hear, like, look, I've been telling people exactly what's happened. I told people in 2020 we had the pandemic. They dumped interest rates trying to stimulate the economy. They did quantitative easing trying to stimulate the economy. They tried to get people to spend because nobody was working and spending after 2020. It worked to a certain extent, but the consequence of all this stuff, as well as like stimulus checks and more economic stimulus, was inflation. Inflation spiked up to almost 10% from all the increased spending that we got, you know, from all the money printing and all that stuff. People were arguing with me last week about how inflation wasn't caused by spending and like all this different stuff. And it's like, of course, like it's economics 101. Like prices go up if people spend more. If I sell bubble gum for 25 cents a piece and I sell out every day, you better believe I'm going to raise prices to 35 cents tomorrow. And so that's the nature of inflation in economics. And that's how it goes. And so that's kind of what happened. But the last few years, we've been doing a hawkish, restrictive monetary policy up until the last 3 months, where we pivoted to more rate cuts. The big question is, how did this talk influence rates? I'm going to take a look at the CME watch tool, and we are going to day trade a little bit. I think we still got a couple minutes left to day trade. So stick around. Don't go anywhere. We are going to day trade some. So right now we're at 77.23 likelihood that we're going to cut rates. We're looking at about 73% likely that we're 77% likely, almost 80-20 right here. So we're pretty probable that we're going to cut rates. Now, this is subject to change because not only do we have jobless claims, unemployment filings dropping tomorrow at 8:30, we'll stream it all live. If you subscribe, we cover all the economic reports. Everything's free. We don't sell a course. We don't sell anything like that. Everything is completely free. We do have sponsors, so cry about it, but everything's free. We don't have any paywalls behind our content. And we're going to cover jobless claims, unemployment filings tomorrow. But Friday, we have non-farm payrolls and unemployment data. Unemployment's expected at 4.2%. Non-farm payrolls, and this has the potential to move these probabilities for rate decisions, right? So this has the big potential on Friday. The payroll numbers are really what you want to watch. Unemployment's important. Payrolls are more important than anything else. They're expected at 214K. We had prelim payrolls this morning. They came in lower than expected, but they're just prelim numbers. And Friday's payroll report at 8:30 is going to be bigger than all this stuff. And so tune in here at 8:30 Friday. We are going to be covering it, and we get thousands of people tuning in because we cover it reliably and we cover it on time, fast. But again, you can see the NASDAQ just broke lifetime highs. So the NASDAQ 100 just broke lifetime highs. You know, and again, it's really confirmed because Powell said exactly something I say. I hear people all the time be like, hey, the economy's weak. The economy's weak. And I try to tell them, I'm like, look, unemployment's under 4.5%, an objectively low level when you take into account averages. Payroll numbers have been relatively strong for the last few years. GDP is almost at 3%. You know, these aren't necessarily the signs of a super weak economy. The reason people think the economy is weak is because inflation has gone up so much in the last 5 years. You know, in the last 5 years, because of all that economic stimulus, and we can blame politicians or you can try to blame Powell or whomever you want, but 2020 was kind of like a black swan scenario. Like, nobody was causing 2020, really. It was just kind of this crazy thing that happened in the world that caused supply chain restraints, all this different stuff. And so, you know, the same people complaining about the inflation that occurred from 2020, you better believe they would be crying if we didn't do economic stimulus in that period and went into a much, much deeper recession or depression. And so that's the thing you have to understand. Like, Powell's job is incredibly difficult. I'm not really like a Powell hater. I'm pretty neutral on it all. But you see some people that just absolutely hate Powell, and tough job for $200K a year. I'll tell you that. If things go well, nobody gives him credit. If things go bad, he's the one guy to blame for it, they say. So tough job. But yeah, NASDAQ's breaking lifetime highs right now. Bitcoin is getting up there too. It's at almost 97,000 on Bitcoin. Look at the NASDAQ pump up here. I don't know what to do. I want to day trade, and so we're gonna stick around. But man, it's a hard job for sure. John, please get a soundboard for all your disclosures. What about this one, dude? Oh wait, I think I do. Let me see. I have one that's titled disclaimer. I don't know if it'll make it pop up. Let me see. Oh, this is music for the disclaimer. Hey guys, remember, I'm terrible at this stuff and may be wildly wrong about anything and everything I say. This content is for entertainment purposes only, and my experiences, wins and losses may be conducted in real time on stream. Do not copy me. I have no idea what I'm talking about. Understand the implications of CFTC 4.41. Hypothetical or simulated performance have limitations. All right, enough of that. So apparently I created circus music for when I do my disclaimer. I should do that more often. I think that would, you know, I think people would love that. But yeah, I have a soundboard, but no, I appreciate it, Naps. No, it's all good, dude. I'm just kind of messing around. On the internet, you can't take yourself too seriously, and that's why I'm the top 3 most serious person ever on the internet. Definitely serious about everything. Yeah, so I don't know. We'll see what happens, man. It's an interesting market, right? Tomorrow we got jobless claims unemployment. Jobless claims unemployment are expected tomorrow. Wait, is the disclaimer still up? Oh, my bad. Hold on. Let me get that out of the way. Look at Bitcoin up there. NASDAQ just broke lifetime highs again. New lifetime high on the NASDAQ is 21,509. Just under 2510 on the NASDAQ here. So we're up a lot. Yeah, tomorrow's jobless claims numbers, they're expected at 215 versus 213 expected. So 215, this is how many people are filing for unemployment week to week. It happens every week. So we also have trade deficit data at 8:30 tomorrow. Minus 74.8 bill is what they're expecting. Last time was minus 84.4 billion. So we'll see what happens in that regard as well. Hello from India. Can you tell whether this meeting will be positive for your market? I have no idea about the market over there, brother. No idea. I know so far the market's mostly reacting positively to the NASDAQ, at least in the NASDAQ. We can put up Bitcoin. Here's the S&P 500 right here, the E-mini futures contract. It broke over 6,000 recently, the last month or two. It's at 60,000 or 6,092 right now. 6,092 is the new highs. I don't know if these are the lifetime highs on the S&P. Let me see. Yeah, this is the lifetime high on the S&P 500 as well. So let me make sure of that. Is that true? Let me put this thing up. Hold on. There's Bitcoin. S&P 500. I'm sure y'all are going to help me out before. Here's a weekly chart. Yeah, so we're at lifetime highs on the S&P and the NASDAQ today. Interesting, man. You know, it's why I always tell you guys, like, listen, every time we have one of these big Fed speeches or whatever, somebody's telling you the market's about to crash, right? Like, somebody's telling you the market's about to crash. You know, every time I cover these things, you got a bunch of people in the chat saying, oh, the market's going to crash from Jerome Powell. Honestly, as soon as somebody says that, I immediately label them somebody that does not pay attention to Fed decisions, meetings, or press conferences, because I cover all of them. Like, I literally cover them all for this channel. We're a media channel here, so we cover them all. The market almost never crashes from these things, not unless we have some big economic stuff coming out. I would say we don't usually, it's somewhere in the middle. But yeah, NASDAQ broke lifetime highs. S&P broke lifetime highs today. Will it continue? Let me end this poll. So we asked people, are you bullish or bearish on Powell's speech? 66% said bullish. Looks like y'all were right because the market pushed up. I'm definitely top 3 most biased ever. Have no idea what I'm talking about. Do not copy me. I'm trying to trade today. We're in a tough spot right now, though. I'm already green. I'm on my 6th green day in a row. Again, I've been using Top Step X, and I've been waking up in the morning and locking myself out until the opening bell. And apparently that's all I really needed to do to have a really good system in hand. Give you a follow on Twitter as well, on X, at Beginner Trades on X. Give your boy a follow. We appreciate it. But if you look at, I posted these stats earlier here. Check this out, man. As soon as we started doing this, right? Literally as soon as we started locking ourselves out. Top Step X has this really nice lockout feature where I can log myself out of my account however long I want. I've been locking myself out until 8:30. Since then, the last 6 days I've been green. 84% so far today, 74% total trade accuracy in the last week or two. Profit factor of almost 2.4 to 1. And so we're doing really, really well there. You can see my profit graph on this end as well. That's my profit graph since the 27th. And so I don't want to give it back and end my green streak, my 6-day green streak. I think when you're on a green streak, it also helps you kind of trade more disciplined, I think, and so I don't want to give it back. It's not, we're up so much, I don't really want to short. But I also think we're up so much, I don't really want to go long either. So it's a tough tell. If I short, the risks are that the market's going to keep breaking highs and I'm going to get punished for it. If I go long, the likelihood that we're extended on the upside after breaking highs for so long that we're going to turn the other way around is, it's plausible. I don't know which one I want to do, so I'm just waiting to see if we get some confirmations in one direction before I take a position here, is what I'm looking at. And again, if you want to check out Top Step with me, this is a 50K funded account on Top Step. They give you a demo in futures. Most pro day traders trade futures. I traded stocks for way too long. The futures market, no PDT rule. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currency, so even Forex traders, a lot of them should be trading in futures, in my opinion. And Top Step's a beautiful middle ground to where if you don't want to fund your own account in the beginning and just lose like I did when I first started day trading, it's a lot cheaper way. Most traders still lose, but it's a lot cheaper to lose here. It's kind of like a souped up demo account, and it teaches you how to trade under pressure. But again, they're an affiliate. I'm biased. Confirm all this stuff with them. If you want to check it out, again, there's the link. I appreciate the love. We had almost 8,000 people here today, which is crazy. Almost 8,000 people for Jerome Powell. It's good to see people know I cover all this stuff live every day, so good to see. Also on the 10-year note. Let me see, where's 10-year note at? It's TMX. This is the 10-year yield at least. 10-year yield's all the way down to 4%, which means that the note is moving up. Correct. So the 10-year bonds are probably heading up right now and yields are going down. So this means that when the Fed is dovish, it means that bond prices go up and yields go down, right? So a hawkish Fed would signal the opposite. So this means that most people are interpreting this speech as dovish, I guess. And yields are down to 4.1%. So I might have that backwards, but I don't think I do. Yeah, y'all hit that like button. We appreciate it. The gold spammers are constant, so I'm not bad about them, guys. But hey, yeah, what a crazy day, man. What do you call it? Lifetime highs? I don't know, because I feel like it. Need music back on? Okay, I'll put some music back on. Again, we just broke all-time highs again. You're welcome. I'll switch it to all-time highs. I like to think of the market as a organism, sir. So that's why I call it that. But same reason I say we a lot when it's just me. Seems more important. NASDAQ just broke highs again. We're at 21,508 now. It's a risk either way you go. Oh, wait, can y'all hear the music? Yeah, there you go. Hey, did we get a donation? We did. Or no, we didn't. I thought we did. I thought I saw the thing. A lot cheaper to lose. That's not why I'm here. Okay, cool, dude. Then don't sign up. Most day traders lose, right? I know everybody on the internet, they're making 50K a week, and you know, they're just living life being a day trading prodigy savant guru out here on the internet. But most people aren't like that, and that's mostly nonsense anyway. You know, what happens is traders end up making 5K randomly gambling a huge amount in their account one time, and then when somebody asks them, they're like, yeah, I make 5K a day, bro. And it's like, do you really? You know, I don't think you really do. And so most day traders lose, man. Like, this is objectively true. If you day trade, you should know most day traders lose. And so it's a lot cheaper to learn day trading on a funded account, you know, a controlled funded account, versus depositing 30 grand and probably losing all of it. What new trader has risk management? Almost none of them. So it makes logical sense, in my opinion. Again, if you want to check out Top Step, link is in the description. Shameless plug. Bro, is NASDAQ coming down, please? Eventually it might, but it's breaking lifetime highs right now. And I don't really want to short it, but I might. Let me try. Watch how similar this is to day trading stocks, though. I'm going to short it here. One micro contract, though. One micro contract. Immediately, I'm down $15. Oh, look. Now I'm up $15. There we go. All right, we just made $20. Oh, we trade the regular NASDAQ. I'm crazy. I don't know what I was thinking. I should have been trading the micros. I was thinking it was moving kind of quick for micro contracts here. We just made $20, though. I'll take the $20 bill really quickly. Very similar to day trading stocks. Rosie's the best. This is Rosie. She's really the best dog ever. Greatest dog of all time. Top 3 for sure. Lifetime highs could be okay. The lifetime of the market. Right. That's what I'm saying, Michael. That's why I say lifetime highs, because it's the lifetime of the market. Do you do technical or only fundamental? I do both. I invest. I honestly, I do a little bit of everything. I'm probably the best at like long-term investing and swing trading, but I do day trade live every day at the open as well. But, you know, I'm really kind of like an economics person, i.e. covering these big Jerome Powell meetings. So MicroStrategy up. Yeah, honestly, we had 7,000 people here at the peak, over 7K. It's kind of crazy, man. The chat's so freaking wild when we have that many people that like anything I say is just getting like, it doesn't even matter. Like, it's just getting swallowed up by the chat. It moves so quickly. Long-term investing videos would be nice. Well, it's pretty easy to long-term invest. Again, not an investment professional. Don't copy me. I was gonna buy that little dip. I still could. All right, I'll try. One micro contract here. We'll add to 2, and then that's it. Long-term investment is pretty easy. It's hard to lose money long-term investing as long as you're investing in like blue chips. You know, and so I'm gonna cut this. It's a small piece, one contract here, small. Like long-term investing, you just kind of DCA long-term into blue chip stocks, and you're pretty likely to make money if you do it right. Like, you just gotta hold them long enough. You just can't buy mid caps. Most people lose money investing because they end up buying crappy penny stocks or mid cap stocks. Like, they see like a stock like Peloton and they treat it like it's Apple, and it's not. Right? Peloton can drop freaking 90% in a year if it can't, you know, it's certainly possible. And so the problem is that people always think the good stocks are too high. They're too high, they're too extended, and they never buy them. And they end up just buying the crappiest stocks because they think they're valuable. Almost all penny stocks are going to fail. If you buy up 10 random penny stocks, you're almost certain to lose money over like a 10-year period. Most of them are going to get delisted and go to zero. If you buy up 10 random like blue chip legacy investment like S&P NASDAQ stocks and you hold it for 10 to 15 years, you are almost certain to make money. And so you're just trying to find value is what it is. You're just trying to find value. We're day trading micros right now, very small, because again, I don't really like the direction either way. We're kind of flat on this position now though, so. See if we can break highs again. Carroll, top 3 worst timing with calls ever. All right, I'm gonna cut it right there. We made money on that one too. We're up about 30 since we started trading after Jerome Powell. Hello. Which one? Yeah. You talking to Jpow, somebody says? Alright, so we're up a little bit. I've never tried, but I'm gonna venture to guess that day trading news while modding 7,000 people. I'm not really day trading news. The news is over. It's lifetime highs, and so I don't mind attacking the strength from lifetime high breaks. Sometimes highs can be like a magnet, but other times, like we tap them. Like sometimes we tap lifetime highs and then just dump down, right? Because everybody's like, oh, we're at lifetime highs, let's sell, and that's the problem. So it just depends. Can you give a few examples of mid caps? Beyond Meat, Peloton, Dish on Demand, just speculative companies that have risen in the last like 4 or 5 years, right? Where they're not penny stocks anymore. They've gotten a little bit better, but they're too young of companies. Like if you look at Apple, when I say mid-cap companies, if I look at Apple's market cap is almost 4 trillion, right? If I look at penny stocks, what's a good penny stock? Yeah, SHIP, SHIP. C Energy. It's got 144 million market cap, so that's a tiny market cap. A mid-cap stock is like 5 billion in market cap, right? So it's small, but it's not. It's just, you'll see them. Like they're mostly new companies that have risen in the last like 5, 6, 7 years. When I say blue chips, I'm usually talking about like big legacy companies like Walmart, Target, Apple, Amazon, Google, Home Depot, Honeywell. You know what I mean? Like those are the companies that I'm talking about. When I'm talking about mid caps, I'm talking about companies that are big, like Peloton, right? But they're still kind of small relative to like the behemoth companies, like $30, $40, $50 range, small market caps under 50 billion, stuff like that, right? Like that's what I'm talking about. Like Peloton, Beyond Meat, just companies that have no business. Like my favorite companies to short are companies that go up so much in hyped up periods. Like Peloton got really big because of like leisure wear after the pandemic, right? But it got up to such unreasonable levels. Like PTON, where did this thing get to? This thing got up to crazy high levels, right? This thing got up to almost $200 a share for Peloton. Virtual reality bicycles. Nobody wants a virtual reality bicycle. Most people would rather have an actual bicycle. And so, pretty predictable. I've been saying this before the downfall started too. Beyond Meat is another example. This is lab-grown meat. And so, vegans are super health conscious, bro. They're not about to experiment with lab-grown meat. Like they don't have enough customers to make this company justify $250 a share. It just shouldn't ever be up there, right? But people get lost in stocks like this and they end up buying them like they're Apple or Amazon or Walmart, and they're not, right? So they can drop 95% a year. And so then people don't know what happened. They think the market's rigged when really they should be buying the healthiest companies in the world, the companies that have the biggest market cap, and really just following like the S&P, the NASDAQ, the Dow. The S&P, the NASDAQ, the Dow do a really good job of analyzing companies that are justified to be in them, right? And so companies that aren't in those, I like to look at stocks that are in the S&P 500 and then isolate a couple that I like and buy those, versus buy those on pullbacks too if you really want to have the best chance. But it's easier said than done, Yeah, no worries. Yeah, again, y'all subscribe. We do this live for free every day. We don't sell a course, sell a service, claim to even be good. Everything we do here is completely free. We don't charge a penny for anything. So subscribe if you haven't yet, guys. We appreciate it. GE is volatile too, but there's a lot of nuance with it. They've changed their name. They used to be General Electric, now they're GE Aerospace. So, same with Palantir, it'd double what the price should be. Oh, maybe. Sometimes stocks turn into blue chips though, but they're risky when they're trying to. What instruments are best to trade in Top Step? I like trading. It's subjective. I could say chocolate cake is good. Other people are going to say, oh, I don't like chocolate cake. Right? It's a subjective, opinionated thing. I like the NASDAQ and the micro NASDAQ. It gives me the volatility I need to day trade it. The E-mini can sometimes just be too choppy, so I get bored, and I just don't like it as much. I certainly don't like the Russell. Sometimes I trade the Dow. I can trade micro Bitcoin on Top Step too. So sometimes I'll trade that, but the liquidity is low, so it's kind of hard to figure out. Alright, so we got this big pullback here. I don't know what I want to do. Alright, so look at this pop up. I'm going to short, I think. We'll try shorting again. We got about $100 cushion on the day. And I know it's kind of risky right now. Nobody's shorting. But I think sometimes the contrarian view of stuff is good. You can catch some breakdowns. I just don't want to get stuck in like a long-term downtrend. We'll hold some of this break even. So if we start to push up, I'll cut half of it and then let the last piece work. Keep it small. I want to see a larger flush down here. Yeah, I'm gonna cut half. Maybe we add to it if we're green. We're right around lifetime highs, so there's risk for sure. Oh, let's see, there's another breakdown. I'm trying to keep it like low. I should have held my short. My short would have worked too. So we're doubled our short position here. We're in 2 contracts again. Okay, took a piece off. We're trading very small just because we can. There's no commissions on Top Step X and tiny amount of fees, so we can trade like very small and just kind of baby trade. That was too small. I'm probably gonna cut it. I'm not used to trading at this part of the day, guys, and so I'm just gonna get out of here. Right, if yields go up, TLT, which is bonds go down. Yeah, I know about TLT. Sometimes I get it backwards, but I'm pretty sure the way I had it was correct. Yeah, I'm trading micro NASDAQ, so tiny. I'm gonna get out of here though, guys. Hey, listen, you want to check out Top Step? Like I said, links in the description. Great way to learn how to day trade. Most day traders lose, although I'm biased, of course, like I always say. Top 3 most biased ever. But yeah, check them out if you want. I love you all. You'll have a great day. Tomorrow, jobless claims, unemployment filings, live. Expectations for jobless claims are 215 versus 213 last time. So this is how many people are filing for unemployment week to week. And yeah, they drop tomorrow at 8:30. We'll cover that. Friday's the big boy though. This week we got the non-farm payroll and unemployment report, and so that's a huge report coming out. So just be ready, chat, because that's a very, very large report dropping soon. So be ready. I'll see you guys later. Y'all be good. Have a great day.